Good morning this Monday, the 22nd of April. I'm Grady Wolf, market analyst with Bell Direct. Wall Street ended Friday's session mostly in the red as the theme has gone in the US over the last week, with investor jitters rising amid fears of a pushback in the rate cut outlook from the Fed due to inflation remaining sticky in the world's largest economy. The Nasdaq fell over 2% on Friday as investors retreated from chip stocks including Nvidia plummeting 10% and Netflix falling 9% even after quarterly results beat market expectations. The Dow Jones bucked the downfall trend though on Friday by rising 0.56%, while the S&P 500 slipped 0.88%. While investor sentiment in the US has primarily been focused on the rate outlook over the last week, investors have also been equally as concerned over rising tensions in the Middle East. The S&P 500 had its worst week since last March in 2023 last week, while the Nasdaq lost 5.5% and the Dow Jones gained just 0.01% over the trading week. Over in Europe, markets was a different story in the region as investor sentiment was boosted by rate cut speculations out of the European Central Bank. The Stoxx 600 rose 0.3% on Friday, Germany's DAX fell 0.55%, the French CAC closed flat, and in the UK the FTSE 100 rose 0.24%. Banks led the gains in the region while energy stocks dropped 1.5% on the sliding price of oil to end the week. In Asia on Friday, markets tumbled amid escalating tensions in the Middle East, particularly on the back of Israel's attack on Iran. Japan's Nikkei fell 2.66% on Friday as key inflation data in the region indicated headline inflation fell to 2.7% in March from 2.8% in February. South Korea's Kospi index fell 1.63% on Friday and Hong Kong's Hang Seng fell 0.99%. Locally on Friday, the ASX 200 fell just shy of 1% as all 11 sectors closed the day in the red, led by the rate-sensitive sectors as tech dropped 1.55% and REIT stocks fell 1.45%. Karoon Energy fell 5.4% on Friday after downgrading guidance for oil production in FY24. The price of gold rallied to a record high on Friday, above $2,400 an ounce, as the safe haven asset soars in popularity both from investors and global central banks amid rising geopolitical tensions and deflationary pressures in certain key economies around the world. Ahead of the first trading session of the new trading week, the SPI futures are expecting the ASX to open the trading day down 0.6%, extending on the negative sentiment from the last week. On the commodities front this morning, oil is down 0.1% to trade at $83.03 a barrel. Gold is down 0.3% at $2,384 an ounce, and iron ore is up 0.28% at $108.25 a tonne. One Aussie dollar is buying 64 US cents, 99.3 Japanese yen, 51.87 British pence, and 1 New Zealand dollar and 9 cents. And now let's dive into some trading ideas for your consideration today. Bell Potter has increased the 12-month price target on Gold Road Resources from $1.85 to $2.10 and maintain a buy rating on the gold producer following the release of the first quarter 2024 results. Despite significant rain events impacting production and damaging the road supply route to the company's Gruyere project, Bell Potter's analyst believes the mining issues have now been overcome and the company's share price should recover, supported by gold price tailwinds. And Trading Central has identified a bearish signal on Sigma Healthcare following the formation of a pattern over a period of 27 days, which is roughly the same amount of time the share price may fall from the close of $1.25 to the range of $1.08 to $1.12, according to standard principles of technical analysis. And that's all for this Monday morning. Have a magnificent day, and as always, happy investing.